Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week of July 11th. Now usually the week following the non-farm payrolls is rather quiet, but this week we have several points of drama to watch for. As usual nowadays, the UK, Britain, will be in the spotlight with the Bank of England Monetary Policy Committee decision on Thursday. The Bank of Canada also meets on Wednesday. There's a large number of important U.S. indicators, especially on Friday, and a raft of Fed speakers throughout the week. Finally, there are a large number of important Chinese indicators coming out, including the crucial GDP figure. Now, the best performing G10 currencies last week were the yen, the New Zealand dollar, and the Australian dollar. That's kind of difficult to reconcile, given that the yen rises during risk-off periods, while the Kiwi and Australian dollar tend to be risk-on currencies. Apparently, the market thinks we're in kind of a sweet spot where growth isn't so strong as to trigger tightening, yet not so weak as to derail the global economy. In such a situation, investors go for yield and carry trades, which means the Australian dollar and New Zealand dollar. Personally, I question this view. I think the U.S. labor market is still improving. In that respect, today's labor market conditions index and tomorrow's job opening and labor turnover survey report, while not market moving, may be important for Fed members in making up their minds. The labor market data is likely to be reflected in the comments we get from the many Fed officials speaking this week. 8 of the 12 regional Fed presidents are scheduled to talk. That's 8 out of the members of the FOMC. Some of them are talking twice, giving us a good cross-section of the FOMC's views. I'd expect them to continue to talk up the possibility of a rate hike this year, which should support the dollar. The pound, meanwhile, may recover somewhat as risk aversion declines, especially if the Bank of England holds pat, as I expect. The direction of the euro probably depends more on developments with the European banking system than on the data. In that respect, watch the Eurozone finance ministers' meetings today and tomorrow. In addition to discussing the banks, ministers will discuss fining Spain and Portugal for breaching the EU fiscal rules. Now, the big event of the week will be, as I said, the Bank of England Monetary Policy Committee meeting on Thursday. Economists are evenly divided between whether the bank cuts rates at this meeting or cuts them at the next one in August, when it will issue its quarterly inflation report and the staff produces the first set of post-Brexit forecasts. Personally, I expect that they'll wait till August and that they won't announce any further quantitative easing measures at this meeting. That could cause the pound to firm up temporarily. The Bank of Canada, on the other hand, is unanimously expected to keep rates stable at this meeting. There's a 25% chance that they cut at some point before the end of the year. I expect them to repeat the comment from May that the risks to the bank's inflation projection remain roughly balanced and to keep rates steady. That probably wouldn't give a big push to the Canadian dollar either way. For the U.S., the big day is Friday, when we get retail sales, CPI, Empire State Manufacturing Index, industrial production, and the University of Michigan Consumer Sentiment Survey, all within the space of 2 hours. The key ones are retail sales, which are expected to be sluggish, as is industrial production, while inflation isn't expected to show any great acceleration. So net-net, the data may just confirm that second quarter growth is probably closer to the New York Fed's 2.1% forecast than the Atlanta Fed's 2.4% GDP now forecast. That isn't great, but it's better than most places and should support the dollar. For Europe, as usual nowadays, politics will be the main concern and the data will be secondary. Industrial production on Wednesday is the only major Eurozone indicator. That's expected to be weak, which could add to the euro's struggles. Finally, China will take center stage as this week we get CPI, trade, industrial production, retail sales, fixed asset investment, and the all-important GDP data. The data are expected to continue to show the gradual slowdown in the Chinese economy, which will do nobody any good. Australia, the Australian dollar and New Zealand dollar, good performers recently, could suffer. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.